Trump slams copper market. 20% price crash explained. Imagine the shockwaves rippling through the financial world when President Trump unexpectedly announced a 50% tariff on copper products, leaving raw copper untouched. This move sent U.S. copper futures plummeting by nearly 20% in late Wednesday trading, marking a historic moment for the market. But here's where it gets controversial. How will these tariffs affect global trade dynamics and the price stability of essential metals like copper? This incident is just the latest in a series of unpredictable trade policies from the Trump administration that have left financial markets reeling. If the post-market drop continues into Thursday's session, it could become copper's largest one-day decline since records began in 1968. To put that into perspective, it would surpass the 12% tumble on October 20, 1987, often referred to as Black Monday, when widespread panic led to a catastrophic crash in stock markets worldwide. The implications of such drastic measures are far-reaching. For manufacturers and industries reliant on copper, the increased costs could lead to higher prices for consumers or reduced profit margins. And this is the part most people miss. The decision not to impose tariffs on raw copper could create a complex pricing scenario, potentially leading to inefficiencies and market distortions. As we navigate these turbulent times, it's crucial to consider the broader economic impacts. Will other countries retaliate with their own tariffs, sparking a trade war? Or will they find ways to circumvent the tariffs, leading to a shadow market for copper products? These are questions that policymakers and investors alike will be grappling with in the coming weeks. So, what do you think? Should the U.S. have imposed tariffs on both raw copper and finished products? Or is there a more nuanced approach that could balance national interests with market stability? Share your thoughts in the comments below. Impact of copper import tariffs on U.S. national security. The future of copper imports, a national security concern. The United States is facing a significant challenge regarding the importation of copper, a critical material for both economic stability and national security. On June 30, 2025, the Secretary of Commerce submitted a detailed report highlighting the implications of copper imports on the nation's security, as mandated by Section 232 of the Trade Expansion Act of 1962. The findings were alarming. The Secretary concluded that the volume and conditions under which copper is being imported into the U.S. pose a serious threat to our national security. The economic impact of copper imports. The Secretary's investigation revealed that the current levels of copper imports, coupled with a global oversupply, are undermining the U.S. economy. This situation is leading to the potential closure of domestic copper production facilities, which in turn diminishes our capacity to fulfill national security production needs. The Secretary emphasized that the economic health of the nation is closely tied to its security, as outlined in 19 U.S.C. 1862d. Why copper matters. Copper is not just another metal. It is a cornerstone of the manufacturing sector that underpins U.S. national and economic security. The Department of Defense relies heavily on copper for various defense systems, including aircraft, ground vehicles, ships, submarines, missiles, and ammunition. Its exceptional electrical conductivity and durability make it essential for critical infrastructure that supports the economy and public health. Unfortunately, alternatives to copper often fall short in meeting the demands of these vital industries. A shift in global production. Historically, the United States was a leader in the entire copper production chain, from mining to refining. However, this dominance has waned significantly. Today, a single foreign nation controls over half of the global copper smelting capacity and houses 4 of the 5 largest refining facilities. This shift has left the U.S. vulnerable, relying heavily on foreign imports for semi-finished copper and derivative products. The role of unfair trade practices. The Secretary pointed out that unfair trade practices abroad, combined with stringent environmental regulations domestically, have severely impacted U.S. copper refining and smelting. Foreign competitors are flooding the market with low-priced copper products, driven by state subsidies and overproduction, which has pushed many U.S. producers out of business. This dependency on foreign copper imports creates a national security risk that could be exploited by other countries, leading to supply chain disruptions and economic instability. Proposed actions to safeguard national security. In response to these findings, the Secretary recommended several measures to adjust copper imports to mitigate the threat to national security. These include implementing a universal 30% import duty on semi-finished copper products and intensive copper derivative products, as well as a phased tariff on refined copper starting at 15% in 2027 and increasing to 30% in 2028. Additionally, there would be domestic sales requirements for copper input materials and high-quality copper scrap. Presidential proclamation. After reviewing the Secretary's report and considering the factors outlined in Section 232D, I agree with the assessment that copper imports are jeopardizing U.S. national security. Therefore, I am taking decisive action to impose tariffs on copper and its derivatives to ensure that these imports do not continue to threaten our security. Implementation of tariffs. To prevent circumvention of these tariffs, I will establish a process to identify and impose tariffs on certain copper derivatives. This action aims to bolster domestic production of semi-finished copper products and derivatives, thereby reducing reliance on foreign sources. It will also support domestic fabricators in supplying essential copper products for infrastructure and defense systems, fostering investment, job creation, and innovation in the copper sector. Monitoring and future actions. The Secretary will continue to monitor copper imports and their implications for national security. By June 30, 2026, an update on the domestic copper market will be provided to assess whether further action is necessary. This ongoing evaluation is crucial to ensure that the tariffs remain effective and relevant in safeguarding our national interests. Conclusion. In conclusion, the actions outlined in this proclamation are not merely economic measures. They are essential steps to protect the national security of the United States. As we navigate this complex landscape, it is vital to consider the implications of our reliance on foreign copper, and to engage in discussions about the future of our domestic production capabilities. What are your thoughts on the proposed tariffs? Do you believe they will effectively address the national security concerns surrounding copper imports? Share your opinions in the comments. Trump's 50% copper tariffs shock global market. Massive trade implosion explained. A bombshell announcement on copper tariffs has sent shockwaves through the global market, already reeling from a year of dramatic ups and downs. This latest twist in an already turbulent story underscores the unpredictable nature of international trade in today's political climate. The source of the upheaval? None other than U.S. President Donald Trump, who recently imposed a hefty 50% tariff on copper imports. But here's where it gets controversial. The tariffs specifically target unrefined copper, while refined metals, the lifeblood of global copper trading, are exempt. This seemingly minor detail has had a seismic impact. Think of it like this. Imagine a sudden tax on raw ingredients, but not the finished product. What would happen? Businesses would rush to import as much of the finished product as possible before the tax on raw materials takes effect, right? That's exactly what happened with copper. Traders, anticipating the tariffs, flooded the U.S. market with refined copper, leading to a period of exceptionally high profits. And this is the part most people miss: the impact on copper pricing. The sudden influx of refined copper into the U.S. caused a dramatic drop in U.S. copper prices. Previously, New York copper futures commanded a significant premium over London futures. This premium effectively vanished overnight, highlighting the interconnectedness of global markets and the ripple effects of policy decisions. The market, once characterized by lucrative opportunities for traders, is now grappling with the fallout of this unexpected policy shift. But the story doesn't end there. The exemption for refined copper raises some eyebrows. Why target raw copper while sparing the refined product? Some analysts suggest this move is designed to protect domestic refining industries. Others argue it's a strategic play in a larger trade war. Whatever the reason, it's a decision sure to spark debate. What do you think is the motivation behind this targeted tariff? Is it a smart economic strategy or a misstep with unintended consequences? Share your thoughts in the comments below. Let's discuss. Do you agree with this policy, or do you foresee further disruptions in the already volatile copper market? We'd love to hear your perspective.